a big welcome. Thanks. So it's been a long day already. So this panel is mainly about the traditional venture capital and ICO fund, or we may want to put it as token funds or crypto funds. So I'm the moderator. I'm a fund manager from China. So traditionally, we just do private equity and venture capital fund investment. So our business is basically to select the best fund managers from all around the world. So from last year, we are expanding our business, or still trying to figure out which crypto fund or digital capital fund we should cooperate together with. So that's why I act as the moderator today. And we see here our panelists are very super excellent crypto or traditional VC fund combined with crypto investment together. So let's start with self-introduction about yourself and about your organization. Right, let's start with
Sure.
Kavita. Thanks.
Hi, my name is Kavita. I lead the venture arm of Consensus. Consensus is founded by Joseph Lubin, who is one of the co-founders of Ethereum. So, of course, we focused on Ethereum blockchain. Consensus focus on 4 individual verticals. One is Consensus Enterprise, which is building up a lot of projects with government and private sector on a very large scale. Second is our innovation lab, where we actually seed and incubate projects, which is helping build the Ethereum ecosystem across different sectors. The third very big one is Consensus Academy, where we train the existing engineers, legal lawyers, and some of the management students to build up the whole next generation of Ethereum blockchain users. And the fourth is Consensus Capital, under which we have Token Foundry, led by Harrison Hines, where we launch some of the most credible projects which we find in the space, and Consensus Ventures, which I lead, which is a pre-seed, seed stage fund where we invest both in equities and tokens.
Hi, I'm Linda. I co-founded a crypto hedge fund called Scalar Capital. It's fairly new. It's long-term focused investing in the space with our main theme is privacy coins like Monero and Zcash. We really think that privacy is an undervalued feature in cryptocurrencies right now, so we're taking a heavy bet on that. Another area that I really spend a lot of time on thinking about is decentralized exchange. And then prior to Scalar Capital, I was at Coinbase for 3 years.
Hi, everyone. My name is Lee. I lead the investment arm of the Huobi Group called Huobi Capital. Most of the people know about Huobi as an exchange. We have grown into a group that we wanted to become the leading digital asset provider. So now that we've been in the industry for 4 years, over 4 years, we've seen that there are a lot of very excellent blockchain-based projects, so that we really wanted to help the industry grow into the next level, wanted to incubate projects that really could become the next level blockchain. So with the Huobi Capital, we will actively invest in blockchain projects, could potentially become the next new blockchain. So personally, I'm interested in decentralized exchange as well, then also some of the applications that build on the decentralized network.
Hi, Rodolfo Gonzalez from Foundation Capital. Foundation is a 23-year-old venture firm with about $3 billion under management. We're investing out of our 8th venture fund, which is broad-based, just technology-oriented fund. As part of that, we've been participating in the blockchain and cryptocurrency ecosystem for the past 4 years. Via a few seed investments in companies like BlockCypher, BTC Jam, Brave, now Kick. We're also participating in the ecosystem in other ways via token sales, as well as incubating companies. And yeah, excited to be here.
Yeah, thanks. As you see that this group really represents a very good combination of the traditional VC players like me and Rudolph, and also these three also come from very different backgrounds. So exchange-backed investor, and also Linda as the new, you just initiated the new fund, right? The hedge fund style, long-term only token fund. And Capital is representing one of the most prestigious capital force in this area. So one thing really make me quite curious, and that's why I'm leading this this panel, is I'm really curious about how do we evaluate token. It's like 200 years ago, 300 years ago, when these Wall Street bankers sit together to create a kind of stock exchange, and then they have no idea about the PE ratio or PB or whatever. Like maybe 20 years ago, no one knows about the daily active user or how to evaluate the internet or mobile internet or gamification industry. So now we come into an age that this whole blockchain or crypto world is so disruptive and so new for all of us, actually. So I don't see the valuation standard as a traditional asset manager. So this question really makes myself quite curious. So I'm wondering, what's our panelists' view on this? Maybe we start still with you, Kavita. Yeah.
I don't have a very optimistic answer to your question, to be honest. As much as we have seen in the market, there is really no standard as of now. We strongly believe that with respect to token investments, we are in the bubble. And this bubble is the whole token launch started with a very good ethos that the founders should be able to reach out to bigger public, be able to raise money, not get too much of dilution of equity, or be a part of a niche group. But where it has led to $100, $200 million, which was like a couple of months back, and even now, $30 million, $40 million when you just have a white paper done. What are the bases of that potential, and how people are actually creating, if they are creating, any sort of discounted model to figure out what's the present value of that market? I don't think that rationale exists in the market at all. I think now we have done 3 token investments, and they have pretty much been based on the team and the idea, but also very much coming from the consensus ecosystem. How much guarantee do we have that we can support those teams, both on technology side and the reach internationally, to take them to the next level? So the way we evaluate is very, very different. And we are still very conscious about what to invest and what not to, because we also don't right now have a logical explanation which could go in the financial markets.
Yeah, I agree. There's no right standard in the space right now. Everything's so new. I usually ask 3 questions, though, that filters out a lot of the noise for me. First I just ask, is this something that anyone even would want to use? And that's very typical of any other company that you would look at. The other 2 questions are more specific for decentralized systems and tokens. The second one being, does this actually need to be decentralized? There's many projects where this would actually make more sense, it being a centralized system. The third thing that I look at is, does this token actually make any sense? Can you just take this token and replace it with more liquid coin like Ether or Bitcoin, and it would act the same way? If that's the case, we're not interested. And then from there, we're looking at the projects that we feel answer all those questions, and then we're evaluating on the teams. The teams are really important in the space. We're looking at their motivations for coming into this industry. We're looking at how strong the developers are. My co-founder is a software engineer, so he's actually diving into the code and looking at how strong the coding practices are. We're also looking at the token dynamics, the supply, inflation rate. We're looking at the community. It really matters to have just a strong community around it. We're not interested in projects that really have this kind of speculative pump and dump kind of situation. We're looking for teams that really have a strong community around it. What's the governance of the project itself? Is the team holding on to majority of the tokens, or is it more decentralized? So there's a lot of different areas we're looking at, but there's no hard framework where if it checks all these boxes, then we will make an investment. But we're evaluating it very holistically right now.
Yeah, I mean, I agree with the previous two guest speakers as well. So I think in this space, when it comes to valuation, there's no perfect formula that you can put in all the parameters and you can come up with a fair valuation of each project. But obviously, when we look at the valuations that we see in the market now of the recent ICOs, obviously some of the valuations are way over what way over our expectations. So those projects that definitely will pass those projects. To be quite honest, if we think about it as a fair investors, our take is, if we raise a project ICOs, we raise like more than $200 million, or even comes to $300 million. What are you going to do with that much money? So it doesn't really make sense to us, and that doesn't align with our investment philosophy as well. And when it comes to a fair sort of assessment, before we really make make a decision to go ahead, there are definitely many aspects that we're going to evaluate, including whether or not that it's really the blockchain technology is really needed, whether or not that this is really decentralized, and also that as a fund, we're going to look at whether or not that this project is cheap enough for us to go ahead. There are lots of other projects nowadays in the market doing similar stuff. So we're gonna compare it whether this is a good bet for us. So if we are able to fund a cheap enough projects that investment opportunity, we're gonna go in. So I guess that's our take for the valuation.
Well, I guess since I've been in venture and even before getting into venture, the question of valuation of just anything that is early stage technology is always, pie in the sky sort of thing, right? Like if you talk about being the first investor into a company, potential as an angel or as a seed investor, you always it's more the reflection of supply and demand and negotiation, and it's almost like a placeholder, right? When it comes to the company, so you would say, hey, I'm starting this new thing. Do you want to invest? I just set up a convertible note, and I'm raising X amount of money. Is a $3 million cap something reasonable or not? 4 million, like whatever, right? And you would see a reflection of your perceived value as an entrepreneur as what the price would be, right? And it's like, did you work at any of the last generation of technology companies that was awesome, right? Yes, check. Do you come from a pedigree school? Yes, check. Are you technical, non-technical? Well, that will give you a price or a discount. Have you started a company before, first time, second time entrepreneur, blah, blah. That gives you like a range. I think what is happening right now in the evaluation frameworks that folks are using is that, you're not actually getting value in the equity of a company, right? So who knows what those claims will be, and who knows what that token does to the capital structure of the company going forward. So a big open question. Second thing that is happening is that because you're valuing essentially a token network relative to the equity of the company, there are certain things that happen to that valuation framework that you have, right? You don't have dilution going forward, right? You have liquidity, which doesn't quite exist in the traditional world. You have a bunch of other considerations, but at the end, I think where the big delta is happening is that you have projects that are less than 2 years old raising the equivalent of a growth equity round, right, which is like $30–40 million. That's like Series C, Series D type of fundraising, which would traditionally happen for a company that has been around for, between 4 and 5 years, with 100 million revenue run rate, almost hundreds of employees, but you're doing it on companies that have like less than 2 years and maybe a few lines of code. So there's clearly a disconnect, at least relative to what already many people consider to be a bubble, which is technology. So it definitely poses a question of like, well, then what is the fair value of these things? And it's very unclear at the moment.
Right. So it seems everyone agreed there's no clear standard for valuation. That's it, at this time, at least at this stage. So the next question that we said, we agreed that we should talk about the exit strategy of ICO fund. Actually, to be honest, I don't know what exactly it means. And maybe you just sell it. I don't, of course. But I still want to share this question with my panelists. Maybe you want to transform into what's your investment strategy? What's your edge when you are doing investment in crypto? Or, I don't know, maybe you do crypto token, also you do some equity to some companies that blockchain-enabled application, or you just buy from exchange and do the trading. So what's your investment strategy? And at the same time, you could answer, if you have relevant topics about the exit strategy, you could share that with our audience. Is that
I feel
okay?
bad for you. We don't have questions for you here.
Right. Over it.
Yet. I think it really depends upon different funds have been doing different strategy on it. Mm-hmm. Some are just doing high frequency trading, which is to buy things and then be the liquidity player as soon as those tokens are launched. There is it's a new technology. So everyone is experimenting with how the token economics is going to work. So a lot of people who gets into tokens very early on and get deeper discount, of course, because they are also one of the first backers, one of the first liquidity provider. Actually, as soon as the tokens are launched and there's a liquidity in the market, they have, based on how tokens do, they have their own strategy. I know very reputed funds who just keep on turning around every day as they play it in the money markets. They would start doing it with this. But I also know a lot of people who actually wants to build the market. So at least for our fund, we want people to do lockups. We insist to companies we invest in to have minimum 6 months to 1 year lockup. Again, it's so new. We don't know what is the long-term strategy. Is the token actually should be 10-year fund, like the token fund should be 10 years or 15 years? We decided to go somewhere in the middle with 5 years because we think that first 2 years, most of these companies will need next year or two to actually have utility for the tokens which they have launched. It will take them time to build up their product, launch the product, be on the mainnet, create the community around it to actually start using that token and put it on the circulation. And once that happens, then actually the real game begins. Right now, it's pretty much speculative and you don't have anything and it's just you're buying and selling based on the profit. So I guess nothing is right. There's no right or wrong way of doing it, but for Consensus Ventures, we are doing deep diligence on the companies we do, and we just want to be their long-term strategic partner to at least hold it for next year to 2 years and have the real utility come out.
Yeah, we're the same way. We're long-term focused, so I don't really spend much time thinking of like the exit strategy for an ICO fund. It's more, are these projects that I think are going to be a big deal in 3, 4, 5 years from now? And so when we make an investment, we're willing to hold on to it. Even if there's a liquidity event, this is something we think is going to be bigger than just if it just gets listed on some exchanges and pops. So we're very mindful of focusing on long-term investing. At the same time, we also don't want to just be capital to the projects we invest in. We also want to help influence and help them actually grow. And so we'll be advising them on technical strategy, making introductions as needed. And we think that actually we can have influence in our own investments themselves. I definitely agree that lockup periods are needed. For us, whenever we do investments, we always take the longer lockup periods because we are thinking for the long term. Also, I'm really a big fan of vesting schedules. I really like to see that the teams have a vesting schedule so they're not just the second an ICO happens that they just leave the team and stop working on it. So really mindful of how they've actually structured the token sale itself too. Yeah, so there's no like clear answer to like when we would sell something. We generally look at our framework, where do we think this project is going to be, and as it nears that point, like several years from now, we'll reevaluate if we'll sell that position.
Thanks.
Yeah, so I think when it comes to investment strategy, the advice I give to lots of people is, the easiest thing, if you look at the history of the cryptocurrency, I mean, the easiest way to do investment is just hold on to it and don't do anything about it once you buy it. So if you buy Bitcoins, you buy Ethereum, like 4 or 5 years ago, if you don't move anything, you don't sell, and don't do any arbitrage, perhaps you are having a 10 times or 15 times return already. So it comes to sort of, the question was the asset strategy of an ICO fund. I guess we're using the same strategy. So we invested in a project that's very early stage. We are willing to see lockup periods. The reason why is being, A is because if it has a lockup period, probably the valuations will be, will be cheaper. It's fair because lots of people are. I had to say that lots of people are speculators, so that they wanted to buy tokens and they want to sell it like in 30 days. So if we have a longer lockup period, perhaps as a fund that we can get a better deal. And that's one of the reasons why we want to see lockup period. And second is because once there's a lockup period, it shows commitment from both sides, from the investors and also from the project team. So it shows the commitment that they wanted to do this project for a longer term rather than just want to cash it out once they raise the funding. So I guess for us, it's the exit strategy for a fund. It's sometimes our main strategy is obviously hold it for midterm and long term. But sometimes if there is some cases happen, some black swan cases happen, it's not rare cases that we see that some of the ICO projects, the founders resign once they finish the ICO. So in those cases, we had to liquidate our positions. Yep.
I mean, we, as venture investors, we tend to have a very long-term focus. So what that means in today's world is that, you just have incentives to play this beautiful game of, if you have a brand name, you have some level of access to the earlier rounds, and you get beautiful discounts, right? And so by the time the tokens get traded in an exchange, you're already in the money for your investment. That just doesn't happen in any of the other areas that we invest in, right? So it's just a beautiful tautology where if you tell me this is going to be valued at $1 billion, but I'm going to give it to you at 10. And I'm like, all right, sounds good. But then if somebody else comes in and says like, all right, yeah, just because you are a brand name firm, I will go and buy it at $1 billion. I mean, if it works, why wouldn't you do it, right? And then everybody just can hold whatever their position is. Once your position has been covered, then you basically acquired a free call option with an unlimited upside. Assuming that your cost basis is low enough, it's a beautiful business model. So at least for now, that's the state of the world, where if you can get into the pre-sale of many of these things, then you will get rewarded immensely because it's long-term focus, lots of uncertainty, lots of volatility, so you can make money hand over fist along the way. Big question is like, what happens in a few years, right? Like, what happens when if there's another winter similar to what happened in 2015, 2016 in the cryptocurrency markets, then it's going to be quite interesting to see what the exit strategies for all of these funds are. Because as far as I understand, like if you're set up as a hedge fund, you have windows of liquidity where your investors can demand that you liquidate your positions and get their money back, right? In some of the cases, you might have lockups. In some cases, you don't. But it can very easily happen that many of these funds are today 20% illiquid because they're in ICOs. But suddenly, if there's a 90% crash in the market, then you're suddenly 60, 70, 80%, 90% illiquid. And what does that do to you and to your position and your amazing risk management abilities. Tons of questions around any of these things, right? And so the more that I've seen people do today is that they try to get in at the earliest position possible, because then your cost bases are super low, then volatility, you cover your position, and then you kind of like go along for the ride. And whoever tells you differently, I think it's way smarter than me, for sure, which there's a lot of people out there. But today, that's the state of the world, in my opinion.
Yeah, thanks. So the next question. Let's be quick. So,
Yeah.
yeah. So next question is about will blockchain technology disrupt venture capital? I discussed with Rodolfo just now. Actually, he believes that I just shared with him.
Yeah.
Yeah, he believes that it's not only disruptive to the venture capital industry. It's more about how maybe we can change that into how blockchain technology would transform our VC industry. And as long as to disrupt, then it maybe is disrupting the whole financial industry, or it's a game changer for how people organize together to make efforts for something they believe, rather than it's disrupt the only VC industry. So I believe this question we could separate into two questions. The first, how blockchain technology could transform our VC industry.
I think it will absolutely transform the venture industry. I mean, it already is doing it, right? There's no question around that. When you look at venture today, it's a reflection of an industry based on access, right? Yeah. Access to certain school networks, access to certain company networks, and that's the state of the world. So will it democratize access to more people that can participate and vote with their dollars, and if they actually have an insight, participate earlier into the life of these companies? I think absolutely it will. It would be really sad if blockchain technologies only disrupt venture capital, because in the grand scheme of things, it's just such a small asset class relative to everything else that is out there. It's like 30 billion, 40 billion. That it would just be a pretty sad promise. I think it's just going to be exciting to see a bunch of other areas
That's already happening.
get tokenized.
There's already futures out there. FXs are getting launched on Bitcoin and Ether.
Yeah.
So that's already there out there.
I think it's just going to be awesome and exciting.
Right.
Yeah, I think to be quite, I agree with him a lot. I mean, it's going to be sad to see that blockchain only disrupt the venture capital side of it. I think it's going to disrupt every single process in the in the fundraising and also all the way to to product development. So like you said earlier, when it comes to risk management in the traditional venture capital, it's more difficult to manage your positions because they're not that liquid. But in the crypto world, some of the positions are quite liquid. You can easily sell them off in the secondary market. I mean, obviously we talk about lockup period, but some of the positions that it can easily be managed, by our secondary market strategy. And also that if you look at the cost of funds in the traditional venture capital, it's really high. But it comes to ICOs or any other forms of crowd sales, any other innovative form of crowd sales, the cost will be relatively lower, from the project side of it, or from the founder side of it. Would say that they're more willing to embrace the way of ICO rather than the traditional venture capital way. So more and more things are happening. I think we already see that there's a trend that the traditional venture funds are trying to adopt the ICO ways. So I would be excited to see that more changes are happening, and then everybody's trying to embrace the change of it rather than being skeptical about the ICOs.
So for me, I definitely agree that ICOs are disrupting VCs, but I also think that VCs are still very important in the space because it might be really easy to raise capital from a bunch of different people, but what VCs can add value to is actually how do you create a company from start to finish. And there's a lot to it right after you raise capital. Like how do you actually hire out strong engineers? How do you how do you create a company structure that actually makes things efficient? Like how do you manage your money? So there's a lot of value that VCs add. So I think that they're still going to be increasingly valuable, especially the ones that have a good bridge between the crypto world and traditional VC. I think that those are going to be the ones that projects will really try to seek their advice from. It's great that these tokens are distributed to thousands of people, but at the same time, thousands of people are not going to necessarily give you the best understanding of how do you now run this protocol or company going forward. So I don't think they're going to be disrupted like in the entire sense they're going to go away. And I think that the good ones will be really value add.
I'll try to answer very quickly. I think the disruption part is figuring out what's the best and what's working from both sides and creating a combination of two. So something what we have been doing at Consensus Ventures is our whole team comes from a traditional VC background. So we pick up the good things, which, as you mentioned, like having that ecosystem of providing the next CTO for our company, CFO for our companies, and like where to go and combine the best advisors. Combining it with the new chain of how the token economics work, and then what is the right way for the utilization to the launch, to the exchanges, to everything. I think the disruption is how do you take the best of two markets? As we already talked about, some valuations on the token side doesn't work, some way of doing equity doesn't work for a lot of projects. How do you create the best of two to create a milestone project-driven benchmark mechanism, which over time sets up with the right bubble of valuation, is what we are looking for. And that's going to happen very soon, and more VC funds. We already know some of the biggest San Francisco-based VC funds have already started experimenting with how do they create their own investments in tokens or equity, and I think that middle ground will come very soon.
Yeah. So according to our panelists, at least, these VCs actually need to welcome the transform and also get ready for the crypto world coming. And so next question, let's naturally lead to, why some VCs are skeptical about ICO or tokenization economy. Maybe still start from Rodolfo.
Well, I mean, that one is pretty obvious, right? Like compared to the hurdles that a typical founder would have to go through in order to raise money for an institutional investor, relative to how easy it is today to raise a big ICO. There's no question that people are not going through the same amount of diligence, period, right? Like when you have, not to pick on Bancor, but like 140 lines of code for over $100 million raised, that clearly would not have happened in the institutional world, right? So if you assume that somebody's not being as rigorous as you are, then you assume that is foolish or that is crooked or whatever. So that's pretty obvious, I think, why folks are skeptical.
Right. So.
Yeah, I mean, I think that we discussed a lot about, the differences between the traditional venture capital and also an ICO sort of way of doing fundraising. I mean, that's where the people are getting skeptical about. We talk about valuation model, we talk about due diligence, risk management, and all that. We have a proper way of doing all those things in a traditional venture capital. But when it comes to an ICO and all of these things, seems like they don't work anymore. You can actually find an equivalent way of doing the exact same thing, and people are questioning. But if you look at the result of it, the outcomes, all these projects seems like to be quite successful because they raised that much money, and then they're still doing pretty okay on the secondary market. So I think the differences creates doubt, but it also creates it leads us to think about why this would happen. I guess we are living, everyone here. I guess the reason why we come here is we all want to understand decentralization. We all here because of the beauty of blockchain. So with the decentralization, that it will help us get us into this stage. We can do these things nicely. So yeah. So I guess my point is, with the doubts, we always leads us to think more about, why they can be the way they are. Yeah.
Yeah, and Rodolfo hinted at this earlier. I mean, it was essentially these projects are raising massive amounts of money right at the start, whereas traditional VC models, you have all these different series. And I'd really actually like to see projects start to do series of raises in this space. As soon as they hit a milestone, then they are able to get more funds. It doesn't make sense to raise all of it at once, and especially the all of it is way more than they'll ever need. So I think that people are rightfully skeptical. The other part is also around vesting schedules for tokens. I mean, in traditional VC world, people are definitely used to the concept of employees have vesting schedules. They can't just leave the company right upon it, them raising money and then just kind of be able to leave with everything. So in this space, there's many projects where these tokens don't even have any sort of lockup or vesting schedule, and that's very scary. How do you know this is actually going to be something that's sustainable? So yeah, I think that there's a lot of things that can be learned from traditional VC model that haven't been yet applied to the token space yet.
I think I agree with all the reasons, and I also feel like just not VC, I think every individual who's putting their Ether and Bitcoin and all the currencies into these projects without even knowing like this team is going to exist after a month or not, without having any legal contract, not seeing any legal documents or milestone, as you said, I think they should also be scared. And this whole FOMO economy around tokens should settle down and have a balance.
Yeah, there's some skeptical attitude is healthy then, right? So let's be quick. It seems that they are waving hands for me for the time control. So the next question and the last one, how will the ICO market evolve? And then let's discuss about the market trend, about the crypto world or token economy's future. So Kavita, I know that Consensus have a real special take of view on this. So maybe we should start from Consensus.
So as this token economics have been improving, how the token launches are going, new concepts are coming. Some are great, some are not, some are still evolving. So at Consensus, 2 months back, we took a very big stand, and we started a project known as the Brooklyn Project. And I want to give a big shout out to our legal team, especially Pat and Matt, who have been working very diligently to work it out. So we don't do SAFT anymore. We actually released a public document with a lot of leaders in this market to sign and say, we are completely against SAFT. We don't believe that there should be this whole discounted models with no lockup periods or very small lockup periods, which has no visibility for the bigger number of US investors to actually invest in it. So the Brooklyn Project stands to say, how do we create a token economics where we do retain the value system that anyone and everyone can participate in it? At the same time, balance it with various deliverables, as you talked about lock-in period, also a step approach probably, project to project, where they have maybe first $2 million at this as you do it in traditional venture investments, which is at the seed stage, you have a better rate, but you are doing 2 million, you have to deliver the product, now the value is higher. How to create those layers so that there is some sort of sanity check and there is some sort of a check balance in the system, while maintaining the main ether where anyone and everyone can invest. So for us, that is putting the market standard, that is taking this ERC20 tokens economy into the next level. This is still a project which we are working on, we are working to create a particular model, but we still believe that it's an open debate, and we are trying to hear more and more entrepreneurs how they want to deliver, and more investors how they want to invest and work out with something.
So I think that this year, and it was reflective also last year, there's a bit of ICO burnout. So there's just too many projects coming all the time. And I think that's going to continue on, and projects are going to start having to really differentiate themselves by showing that they've been really thoughtful about how they've structured things, that they actually have a product that's live before doing their token sales. So I think there's going to start being a shift towards kind of these better structures. I also think that a lot of projects are going to realize they don't actually need a token, and then they're going to go the traditional equity route. So I think there's going to be a little bit more of that divide this year.
Yeah, so I think to me, I think in the next couple of months, then I think we're going to have achieve a balance between the sort of the current ICO model and also the traditional venture capital fundraising model. The reason being that the more ICOs we have seen, projects that we've seen, then the more not reasonable things that we've seen in the structure of the ICOs. So we're going to introduce more of the traditional ways of preventing the bad things happen. For example, that we introduce this series rounds of fundraising. We introduce the vesting model. They introduce a lockup period and all that. So we also do a lot more due diligence on these projects. So, but we can't go backwards and all the way go back to venture capital ways. So I would say that I can see that we can strike a right balance between these two different models in the future. So we can always achieve something that we can protect the investors, but we can also create a more friendly environment for the projects to raise funding.
So one of the things that I think a fair bit about is in today's world you have tokens that are trading in secondary market for projects that have not even launched, right? So effectively you have founders who are mark to market, like if they were a public company, but with nothing out in the wild, right? So the effects of that pressure of the stock price or of the token price in how do you drive the development or how do you run your company are pretty brutal, right? Like when you look at companies in the public market, the board composition changes, the disclosure requirements get more stringent, like the strategic nature of the decisions that founders have to make or entrepreneurs or CEOs have to make just change dramatically, right? It's no coincidence that a bunch of the companies end up, when they hit a rough patch, they end up going private, right? So that they can step aside from the quarterly calls and so on. I think we're going to see a lot of those effects start to play out because right now it's a beautiful market, right? But you're going to have a lot of projects that honestly the teams are not qualified to be handling that much money, period, right? So they're going to run out of money. It's probably going to happen in over time, but you're going to have orphan networks, orphan tokens. You're going to have, a lot of these. Once the failures start to show up, it's going to be quite interesting to see folks demanding more discipline from teams and enforcing that discipline on an ongoing basis. And I think that's going to be a good thing altogether. But I think that's going to be part of where the evolution of the market will go as well. The market is pretty ruthless, as we know.
Right, yes, okay. It seems, we have some time control here. So to make it a nutshell, then I believe the venture capital and the token economy would have a lot of combining efforts together. I can see that from my portfolio venture capital firms that some of them are still already preparing themselves for some new investment strategy, especially in the digital economy. And what I see that maybe this industry would be transformed in some way or another, in the sense that they are not investing by this. They are not investing into the equity of companies. They are investing into the token or representatives of some value exchange system. It's not, and also the people is not the centralized people who are working for a company. Maybe they need to evaluate the community or the value system that can lead to a good community of programmers, of true believers. So, but anyhow, the VC industry would add value to whatever form it may take, because they are really value adders. If they really value add to whatever project, then the VC industry can work still as the GP or investment manager, contribute to any project they can contribute, but may take a different form. So thank you, our panelists, and let's give a big applause. Thanks for the insights you shared. Yeah.